in the fading glow of the world's financial screens, a strange pattern has begun to surface. It's a pattern that traders whisper about in confusion, analysts debate in hushed tones, and everyday investors barely notice until it strikes. Stock prices are moving, but not on their own. They're being pulled, pushed, and twisted by something bigger, older, and far more powerful than any single company. The US dollar. It sounds unbelievable, right? How can a simple piece of currency paper and ink, digits on a screen, control the gigantic multi-trillion-dollar stock market? To understand that, we need to go back. Farther than Wall Street, farther than the Federal Reserve. We need to go all the way back to the very moment when money first became more than just money. It became power. Centuries ago, before markets buzzed and algorithms traded millions of shares in seconds, an idea took shape in a small, fragile nation still finding its identity. The United States. That idea was the first Bank of the United States. A place where the new country's finances would be stored, structured, and controlled. But very few understood the truth. This bank wasn't just a financial institution. It was the birthplace of America's financial influence, the seed that would eventually grow into the modern dollar. Global dominance, and dominance always comes with consequences. As the first bank rose, it wasn't instability that people feared, it was its potential reach. Suddenly, one institution had the power to shape credit, manage the nation's debt, and influence trade. For the first time, Americans realized money could be centralized, directed, even weaponized. From the very beginning, the dollar wasn't just a currency. It was a force that would grow stronger with each passing decade. Fast forward through wars, depressions, crises, and booms. The dollar survived all of them, and each time it emerged even stronger. Wars drained nations, but the dollar funded them. Currencies collapsed, but the dollar replaced them. Empires faded, but the dollar became the global anchor. While most people looked only at its surface green paper, familiar numbers, unquestioned authority, traders and economists understood its hidden influence. Because the stronger the dollar became, the more the world relied on it. And the more the world relied on it, the more control it silently gained over everything else. This control would one day move from the shadows into the spotlight, and it would start shaking the modern stock market to its core. Today, the dollar is no longer just an American currency. It is the language of global trade, the foundation of international debt, the measurement of commodities, and the reserve asset held in the vaults of nations everywhere. And with that status comes an immense gravitational pull. Imagine the dollar as the sun in a solar system of markets. Whenever it shifts, strengthens, or weakens, their planets around it move. Bonds, oil, gold, tech stocks, global equities, they're all caught in the dollar's orbit. And right now, that sun is shaking. Something unusual is happening. The dollar is rising and falling in sharp, unpredictable waves, triggered by interest rate battles, inflation fears, geopolitical tensions, and economic rivalries brewing around the world. And each movement sends shockwaves across stock markets. Because here's the hidden truth. When the dollar strengthens, stocks don't just react, they obey. A strong dollar makes US exports more expensive. Companies earning profits overseas suddenly watch their numbers shrink when converted back into dollars. Multinationals lose momentum. Commodities fall. Emerging markets struggle, and investors flee to safety. They hoard cash. They wait. They refuse to take risks, and stock prices drop. Not because earnings collapsed, not because companies failed, but simply because the dollar moved. And when the dollar weakens, everything flips. Exports suddenly look cheaper. Commodities rise. Emerging markets can breathe again. Risk appetite returns like a hungry tide, and stock prices shoot upward, sometimes dramatically. This invisible push and pull has become so strong that on many trading days, the correlation between the dollar and stocks looks like a mirror image. One rises, the other falls. One falls, the other rises. It's almost mathematical. almost predictable, almost eerie. So, the next time you see the stock market making a wild swing, don't just look at the ticker symbols. Look beyond them. Look at the silent force moving in the background, because more often than not, you'll find the dollar isn't just influencing stock prices, it's controlling them. But why now? Why has the dollar's grip become tighter than ever? The answer is something the architects of the very first central bank could never have imagined: globalization. Over the last 50 years, the world has stitched itself together through trade, intricate supply chains, international loans, and cross-border investments. And as the world grew more connected, it also grew more dependent on a single currency, the dollar. Think about this. Today, nearly 90% of all global trade uses the dollar in some form. Over $13 trillion in global debt is denominated in dollars. Foreign governments hold trillions in US Treasury bonds. This isn't just influence, it's leverage. So when interest rates change, when inflation, when geopolitical tensions heat up, the dollar becomes the first, fastest, and most powerful reactor. Every country, every market, every single investor watches it. And right now, the world is nervous. Inflation is uncertain. Interest rates are undecided. Governments are competing, trade routes are shifting, and debt is rising. In this thick fog of uncertainty, the dollar becomes the compass. Its movement signals where fear is flowing, where hope might be emerging, and where money is hiding. So, markets follow it, sometimes blindly. A tiny 0.1% move in the dollar can send billions rushing in or out of stocks within minutes. Not because investors want to, but because they have to, just to survive the wave. But beneath these economic mechanics lies a deeper, more mysterious truth, one rooted in history, psychology, and power. People don't fundamentally trust markets. They trust stability. For centuries, the dollar has represented that stability. Through wars, recessions, political shifts, and global crises, the dollar remained the anchor. And human psychology still clings to anchors. When the world feels safe, money moves freely. But when fear resurges, people run to the oldest security they know, the dollar. And as that fear resurges, stock markets tremble. Because when investors run to the dollar, they are running away from risk, away from stocks, away from growth. The very psychology that once made the dollar a symbol of security now makes it a controlling force, dictating market flows not through numbers, but through emotion. This isn't just economics, it's human behavior harnessed by the strongest currency ever created. And now, we've reached the climax, the moment. The global financial system finds itself trapped in a feedback loop. The dollar affects stocks. Stocks affect confidence. Confidence affects the dollar. And the cycle repeats over and over. Every rise in a dollar tightens the entire financial system. Every fall releases it. It's a pulsating heartbeat that every investor feels but rarely understands. But understanding this changes everything. Because once you see how tightly the dollar is woven into global markets, you start to realize something crucial. This story didn't begin today. It began with that first central bank where money was centralized, controlled, and elevated into something more than just a tool. That moment set the stage for what we are re-experiencing right now. A world where the dollar can move markets, shape economies, and direct the flow of global wealth without saying a single word. A world where stock prices dance not to the tune of company performance, but to the pulse of a currency born centuries ago. A world where every investor, big or small, plays inside the dollar's shadow. And as long as the dollar remains the world's reserve currency, as long as nations trade in it, borrow with it, save in it, and fear without it, this story will continue. Because the dollar isn't just money, it's the silent ruler of modern markets. And right now, it's controlling stock prices more than ever. Thanks for watching.